Welcome to the September 28th, 2020 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. Today, one of the most important updates that we've done in the pandemic and the recovery from the pandemic. So I want you to get out a pen, pay attention, and share it with your friends who may need good perspective. That way you don't have to take the responsibility, right? And so, I'm Spencer McGowan, your financial weatherman, President, McGowanGroup Asset Management. This is your fast-paced weekly tour of the global financial markets, including investment strategy discussion that you can only get at YouTube, McGowan Group, or NetWorthRadio.com. Here we go. This is the Dow year to date, 29.5 at the high, 18.2 at the low. The depths of panic, we were going into a depression. Then you get a big recovery driven primarily by tech, which we're about to get to. Tech cracked. It was a NASDAQ September correction that was actually over a 12% correction in the NASDAQ, and the FANG index even worse. So, year-to-date return for the Dow's a -4. This crack right here says, yes, we're range-bound for a while. What are we going to do? Well, we had lots of income coming into this thing. We reinvested it through the pandemic. Now, we're taking everything off of reinvestment, and we are going to add 10 to 12 great companies. We've already started with the medical dividends, which I'll get to. But don't overpay for stuff just because it's popular, and I got a funny lesson on that coming up. Here we go. This is the FANG index. All right, notice the year-to-date total return. This is the only thing that went up in the market. COVID immune technology went up a huge amount. Yes, that was the right answer for a while. It just cracked, and that's what happened to the indexes. It likely puts them in a range bound as these things come back to earth. A dangerous group that is over 50 times earnings as a group ran incredibly well, but that is likely over, evidenced by this. Now, this is just for fun. Things got so crazy that a company that makes electric trucks that hadn't even made a truck yet, they went from 10, where they'd been a couple of years, to 94. Now they're back under 20 as they realized this is probably nothing but air. GM is supposed to make some trucks for them. We'll see how that one turns out. But people literally paid 90 bucks a share for air because they hadn't even made a truck yet. So, don't get caught up in a frenzy like Nikola. S&P 500, peak earnings were about $40 a quarter. Went all the way down to about 22 per quarter, or last quarter, on its way back up. Projections for record profits, I would say it's 2022, but they actually hit it right here somewhere at the end of 2021. That may be a little optimistic, but that's what's happening in the pandemic recovery. Boom, let's get to that. 25% GDP growth for the quarter we're in. That gets reported in October. October has some great reports for restoration, restaurants included, by the way. Brinker went from 48 to 8 back to 48 as they reopened Chili's and Maggiano's. But that was a 25% GDP growth compared to, that's the annualized 32% contraction before. What does it mean for the year over year? Probably 4.5 minus for this year, 3.7 next year, and maybe a 3% in 2022. What's the impact of the election? More taxes and regulation might be 1% GDP growth instead of 3 out here, and less taxes and less regulation corresponded to 3% or more GDP growth. That's one of the big factors for investors, regardless of the politics one way or the other. There's lots of arguing. One of the September corrections, Washington is in a big cat fight, and it looks like all it's going to come out of it is a bunch of scratches and bites and rabies shots. Well, that'll be over in about 90 days, including likely the election by the end of November. All right. So let's take a longer term view, then think in terms of 6 months, not 6 minutes. All right, The outflows here on the 1 week, the S&P 500 down. The QQQs actually had, that's a NASDAQ, actually had money flows in, but the net outflow of the S&P was about a -6 billion. Year-to-date outflows are 32 billion. Most of that obviously with the pandemic. And where are the money flows coming back in? Pure technology actually had money flows out of $1.4 billion. And so that was one of the factors in the tech correction. And then we look at some of the other indexes. This was a money outflow week evidenced by the September correction, which was quite severe. Now, this is the healthcare sector. One of the high points in terms of adding medical dividend companies to the portfolio. We're going to take all that cash flow. We're going to buy great companies from the portfolios. This has been a focus. We successfully added some down here, and we'll continue to add the great names. Here's the longer term for healthcare. This is the S&P Healthcare XLV, just the group, and that includes providers as well. You can see the bear market cycle that came in right through here. And that bear market cycle for the healthcare index then led to a nice rally. But over the 10-year period, reliable with different entry points, but obviously more permanent spending on healthcare is one of the focuses. On the energy side, we've got reports from ConocoPhillips, demand for oil worldwide restored to 100 million barrels a day at some point next year. Taking a longer term view, also natural gas may have reached, as we speak, the demand levels above 2019. The last report was maybe a -4% or -5% because of the liquid natural gas being exported from the United States. So thank you for tuning in each and every week. YouTube, McGowan Group, share it with your friends. Be sure to subscribe, because when we have fast breaking news in the markets, your financial weatherman, Spencer McGowan, yours truly, will be right here for you. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.